Hello everybody. So today I want to talk about three stocks where we've had some movement. The first stock I want to talk about is Tesla, and Tesla is back down to $1 trillion, only $1 trillion in market cap, back down. That was a precipitous drop. Actually, we were up to 480, close to that, and then the stock just dropped hard with all of the media FUD that there's been lately on Musk. But make no mistake, over the short term, that really doesn't matter. The movements are all about the long term, and in the long term, it's up an easy 3x in 5 years. Just looking at the chart, if you just draw a little line, you can see it's up. If you look at the actual performance of the past 5 years, it's 45% average annual return every year for the past 5 years, which is a return, by the way, that has been in line with the historic return. Because when I look at the historic return of Tesla stock from 2010 to 2025, about 15 years, it was 44%. So us being 45% average annual return for the past 5 years is in line. It's just a very volatile stocks, and the volatile stock, means this opportunity is still misunderstood. And I know I always get that in the comment section. People tell me it's this stock is a sell, this stock is no good. I love Tesla stock. It's I think it's a stock that has so much going for it beyond just the cars. Briefly, the cars, of course, the delivery trend is clearly one way. Sure, there's been some change, but we're clearly going up in the delivery trends. Yes, China is a little weak right now, but it's going to pick back up, especially with a new Model Y being released, in my opinion. But who cares about the cars anyways? Because this valuation is nothing about the cars. This valuation is about, well, just about everything else but the cars. And of course, the main reason that I'm pleased is, yes, Tesla Energy is ramping. That's one aspect. But the bigger aspect, the catalyst, I see a catalyst right now, which is the robotaxi. The robotaxi starting in June in Austin and likely expanding really fast across Texas, because they don't need any special license in order to launch in Texas. And yeah, that was the news, just 13, 14 days ago. The market was excited, and now the market entirely forgot about the excitement. It's like the market only looks, within a few days of the trading date, doesn't look forward. But this time, this is coming. I think in June, I think this is going to be a perhaps a step change in the valuation of Tesla as people start reviewing it, as people start talking about it. I think this will be the talk of the town. So I'm very happy about that, and I think I consider the price right now a buying opportunity. Now, as a reminder, I have 3 investing buckets: the best in class, regardless of valuation. That's where Tesla fits. I consider Tesla to be a best-in-class AI company. The valuation is really bad. Valuation sucks on Tesla, but I consider it to be best-in-class, and so I don't look at valuation in this bucket. Palantir would be another stock that I own, that I have in this category, where it's the best-in-class company, but the valuation makes absolutely no sense. My 2 other categories are good businesses with low valuation. That's going to be SMCI and ELF, which I'll discuss in the rest of this video. My third investing category are pure debasement insurance plays, pure moving away from fiat and going into harder assets, and that's my macro strategy coverage, my Mara coverage, and Bitcoin itself. Let me just say, I find the drop in Tesla unwarranted. Like I said, the media is speculating as to why the stock is down. Here are a few things that I saw. Sometimes the media seems to be saying that, DeepSeek partnering with BYD to develop full self-driving is a threat. I think this is mostly a PR move, because even if DeepSeek is great at generating synthetic data, for synthetic data you still need to have real-world data as inputs. And who has the most real-world driving data out there? Well, it's Tesla. So to me, this doesn't pass like a basic analysis test. I don't think this is a threat at all. This is like saying Nvidia is a threat to Tesla when it comes to self-driving. Yes, they have a program, but they're relying on synthetic data, which needs real-world data to be generated in the first place. You can't teach a car how to drive in a video game just yet, or it's going to take considerably longer time. How about the political involvement? Well, there's a lot of chatter about that. I honestly don't care. But actually, on this one, I say, which U.S. citizen wouldn't like to find out about these people who are 150? I had no idea you could live, past 150. Apparently, there's a lot of people who are over 150 who collect Social Security. Who wouldn't want to find out those people? So I think this is a great thing. Hopefully, we get to find out those people who are 150 still collecting their pensions, So anyways, that's interesting to me. OpenAI buy offer. Some media says it's the OpenAI buy offer, maybe another reaction. It's not a real offer. He's just trying to mess with OpenAI, perhaps for fun. I don't know what's going on with that feud. I don't care about drama. This is not something that I follow, but it's clearly part of the drama and the tension between those two guys and whatever. And global car sales dropping. Yeah, sure, Tesla is a little weak right now. Some of Europe is a little weak. But again, if Tesla was valued based on the car, the valuation would be nosebleed, and that wouldn't make any sense, right? So Tesla is not valued based on the car. It's valued based on the present value of future opportunity, namely FSD and robotaxi are the big opportunities. I don't think it's pricing in anything for energy in the Tesla valuation. Anyways, let me now move on to non-Tesla topics. So SMCI, let me talk about SMCI stock. It was dropped from QQQ. Will it be added back to the QQQ soon? Well, that could be a thing. NVIDIA's Blackwell, which, by the way, is still a little delayed based on this conference call. The rollout may take a little longer than initially thought, but the Blackwell platform of NVIDIA is still going to need liquid cooling. And people who are fearful about this stock, people who, the short reports, all of that sort of stuff, they cannot manufacture liquid cooling data center. In fact, it's SMCI's specialty to manufacture liquid cooling. In the call, we learned from the CEO that they claim to have a 60% market share. So back 6 months ago, they claimed to have a 75% market share. And so my guess is that there's some competition going on with Dell, and Dell is getting some of the business. But if you want a pure play liquid cooling stock, in my view, SMCI is that stock. And the CEO stuck to guidance and gave a guidance of $40 billion as a conservative guidance, 65% year over year. He also predicted 25 billion revenue total for this year. So just moving ahead in my spreadsheet and just getting a little bit ahead of myself, but inputting those two numbers, saying this year we're going to do 25 billion in sales. So revenue this year, I put 25 billion in my spreadsheet, and then they're predicting a 65% year over year growth. So I put forward revenue growth here at 65%. What do I get? I get a 0.1. So not quite under, but almost under 0.1. If this stock starts dropping just a little bit in the next few days, it will be under 0.1. So this is a very cheap stock in my spreadsheet. If you're used to following in my spreadsheet, there's only a few companies like that, and I still find the stock cheap despite it trading at $41 in after hours. I still find it quite cheap. The last stock I want to discuss is ELF, and this one is a conversation of sadness. You may remember 4 days ago my video when ELF was $69. I was like, "Oh, I'm buying like crazy," and I did buy a lot of the stock actually. ELF is up 4% yesterday, so was up 4%. So in a matter of 2 trading days, really, it's up 16% in a matter of 2 trading days, knowing that this stock still has a long way up to go again, because despite it being up 16% in 2 trading days, it's still down 40 to almost 43% compared to January 16. So, a little less than a month ago, right? 4 weeks ago. 3 weeks and a half ago, it's down 42% from 4 weeks ago. It's pretty nuts how volatile this stock has been. I find it very cheap right now. I think it will keep going up. The market is slowly starting to realize that there's a difference between selling in China, right? Estée Lauder, who reported really bad earnings. There's a difference between selling in China and manufacturing in China. Health manufactures in China, sells in the US. They got to pay a tariff. Sure, okay, that's not going to be a big deal, as I've addressed many times in my video. They've dealt with it before. They'll deal with it again. Everybody's going to have to deal with it. Selling to China, though, it's a different story with a tough consumer right now in China. And when I look at the numbers in my spreadsheet, you see enterprise value over gross profit over revenue growth is 0.24 on ELF. So that is cheap. you can contrast that with SMCI. You can see SMCI is 2.5 times cheaper than ELF. So SMCI, in my view, SMCI is even more undervalued than ELF already is. But 0.24, it's verified error. And you have a stock here that achieves a rule of 40 at 43. A rule of 43. SMCI also achieves a rule of 40 at 74. So anyways, I like ELF. I like SMCI. I like Tesla. This was not investment advice. This is not financial advice. This is just entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.